Happy Sunday, everyone. In today's video, I'll share two bullish and two bearish stocks that I think look interesting with regards to the squeeze, where I think that squeeze may fire soon and will have a nice momentum catalyst. Now for this video, the tools that I'm going to be using include our squeeze signals backtester, which is the one indicator I've loaded in, along with the triple squeeze just so we can actually see that squeeze visualized. And to essentially help figure out which candidates to pay attention to, I have the results of our bullish and bearish squeeze signal scans loaded in here. For all Volatility Box members, if you'd like to follow along, you can download all of the tools that I just mentioned from our website, tosindicators.com/squeeze-course. It's included for free with your membership. The indicators that I just mentioned will include the squeeze signals indicator, then the triple squeeze indicator, which is one of our first modules. And then if you scroll down, you'll also find the backtester that I'm going to be using to essentially figure out if this trigger has been accurate or not in the past. The scans are right down here below, the squeeze signal scans, both bullish and bearish. Now coming back into our charts here, let's start with the two bullish candidates first. And the first one is Diamondback Energy, ticker symbol FANG. Now we can see as of Friday's close, we have the squeeze signal printing, and that's not the first one, but rather the second signal. The one prior first printed on February 25th, and the most recent signal was this past Friday, March 4th. Now every time we've seen this signal occur in the past with all of the different Boolean conditions that we've built out, it's been a winner 7 out of the 9 times it's triggered. On average, the winner has been good for right around 8.97%, and the loser fairly close to that, 8.39%. So I like this ratio in that it's almost a 1-to-1 risk-reward ratio. Your winner is actually slightly bigger, but it happens way more frequently, so your probabilities here are in your favor. The average trade duration is just around 9.67 days. Let's round that up to 10 days. So right around 10 days, and again, remember that the first signal printed on February 21st. So we're at 1, 2, 3, 4, and 5 out of the 10-day count so far. So that's where I have a bias that I expect the squeeze to start to gather some momentum, some legs underneath it. Now another stock that I also find interesting, same category or vertical, is Halliburton. Now Halliburton, we have less data associated with it. If you remember in Diamondback, we had 7 and 2 trades. In Halliburton, we have just 1 trade so far over the past 5 years. But that one trade was a winner, 4.86% for that one trade, average trade duration 2 days. Now here, we've clearly exceeded the trade duration, but the thing I find interesting in terms of this stock, that squeeze momentum really looks like it hasn't even gotten going in terms of the histogram. We're also on the second signal that's actually printing. We're near previous highs where I would expect the squeeze to take us above it. And if I zoom out here, you'll see that we're not anywhere near previous highs or previous resistance. Our next level that we really have above where price action's currently at might be this previous area of support, 35.88, but outside of that, we have some more room on the upside towards that 42.40-ish mark. So I think the upside potential here makes this trade fairly compelling. So those are the two bullish candidates, Diamondback Energy and Halliburton. For all of our Volatility Box members, you can also go through the remaining candidates and repeat the same process to take a look at the probabilities in terms of this signal actually working. Now if we switch this over to our bearish side here, so let me open up our backtester, I'll turn off our long entries and turn on our stats for short entries. And let me go through the two stocks that I find interesting on our bearish side. The first one is a little harder to craft a trade around, mostly because there aren't that many liquid options. It's a hard to borrow stock, but assuming you can craft a nice trade here, is Lending Club. Lending Club, we've had the signal 5 times in the past 5 years. All 5 of those times, it's been a winner. If I zoom in here, we can see that the signal is printing one more time here. We have a bearish signal. We have that squeeze looking like it's likely to fire short. And the average winner here has been right around 10.74%. Average trade duration, 10.6 days. So a compelling candidate, but again, one that's a little harder to craft a trade around. One that is easier to craft a trade around is ROST Stores. If I zoom out here, in ROST Stores, we've had 1, 2, and 3 signals, so definitely a lot more bearish activity there. This squeeze definitely has the likelihood to fire short with a lot of bearish momentum associated with it. 2 winners in the past 5 years that it's triggered, 0 losers, so 2 for 2 in terms of probabilities there. Not a huge sample set, but I like the fact that it's been a consistent winner. The average winner was good for right around 2.1%, average trade duration 12.5 days, where we're now getting towards the edge of that duration where we'd expect the squeeze to start to get going. In terms of our downside potential targets, we have not only previous resistance at 86.28, but if I zoom out here, we also have our fib extensions from this swing high to this swing low, which gives us that 382 at 82.22. So that might be a bit more of a stretch target, also occurs where previous support has kicked in, and that seems like a nice downside target if this squeeze does fire short, and we have a much greater than that 2% move down towards that 82.22. That would actually be a move of almost 8% from our current close, and from when that signal first triggered, about 10.5-ish%. So definitely much greater than the average. And again, for all Volatility Box members, you can do the same thing in terms of plugging all of these different candidates into your platform and start evaluating them based off of what the labels present, along with what the average winner versus loser has been. And you can even do things like expand beyond that 5-year time frame to something a little longer if you'd like to expand that backtest. Alright, hope this video was helpful for those of you looking for some candidates for not only this upcoming week, but also the week after that. This should give you a nice starting point for some momentum ideas. Take care everyone, good luck trading this week, and we'll see you in the next video.